Every single year, thousands of Indians transfer money from India to the US. Some are selling family property, some are moving rental income, others are bringing inherited assets or their personal savings overseas. For years, this process followed a very familiar routine here. Your chartered accountant prepared Form 15CA and 15CB. The bank checked the document and the money was transferred. Well, that process has now changed. The Income Tax Department has introduced a new compliance system. The old Form 15CA and 15CB, they are being replaced with Form 145 and Form 146, creating an entirely new digital framework for outward remittances. At first glance, it may look like nothing more than a change in form number to you. But in reality, the government is changing the way cross-border money transfers are monitored. Under the new system, Form 145, that becomes the declaration submitted before money is transferred abroad. Form 146, prepared by the CA, certifies whether the tax on that transaction has been correctly calculated and paid. And here's where things become important. This isn't just paperwork sitting inside a bank branch anymore. No, the information is digitally linked with your PAN, your income tax records, and your annual information statement. Every transfer creates a much stronger compliance trail than ever before. You know what that means? That means if the amount you're transferring does not match your tax filing, or if the tax deducted at source has been calculated incorrectly, then your bank may not be able to process the transaction until those issues are resolved. For Indians in the US, this has another layer of importance. Why? Because IRS already requires the US tax resident to report worldwide income. So the taxes paid in India often becomes part of foreign tax credit claims in the US. If the numbers reported in India does not match the figures reported to the IRS, both tax authorities now have far greater visibility than they did in the past. Well, financial experts therefore recommend preparing everything well before initiating the transfer. Ensure your PAN details are updated, your tax filing are complete, and your CA has correctly certified the transaction before approaching the bank. Because once the process begins, correcting mistakes, it can delay your remittance by weeks, maybe, or even longer. Well, for many NRIs, this isn't just about transferring money. No, for the NRIs, it is about protecting years of savings, it is about avoiding unnecessary delays, and it is about making sure that one financial transaction does not create compliance problem in two different nations. And yes, while governments are tightening financial compliance, the US is also tightening immigration enforcement. And in our next story, we will look at why the Department of Homeland Security has taken an unprecedented step that is drawing global attention across the Indian diaspora.